MMTs, we have the Dow Jones Index on a daily chart right here and now, and the most key important ingredient is when we called the bottom last Thursday, we've had 3 days up from that big reversal. Clear back over here to 10,709, and we closed already from those 3 days on the leverage volatility upside from being deeply oversold from that big reversal that we enjoyed, reversal 1, reversal 2. Here's the thing though. The upside volatility in the dog days of August is that declining daily 10-day moving average has made a bottoming process mathematically. What it really means is, I'm not going to go into it, in the MMTs understand it from being in a school. So what I want people to know is that this part of the trend right here is where the 10-day simple moving average right now still remains at 11,325. What is important about a standard view of life, not, this is not our application MMTs, but what it's going to tell you is that the body of the daily candle is above it, that the MACD bars, when the high frequency robots weren't going to get any lower here, we made the lows up, we had that reversal day down, and we've come up and we've had 2 days above it, and we're right above this part of that ridge right here where these highs were. Now what's going to happen is, because of the amount of decline in the daily simple moving averages, that as we work ourselves up here, it'll be about right here, that's going to be your first resistance level, and anything that gaps up or runs up and tests in these dog days of August, because the upside volume isn't nearly what the downside selling volume was, and these are how we put bottoms in. They're called bear market, not bear market, but bear trends. And bear trends that go, when these things go into bear trends have a certain way of trading up in the volatility, and knowing when to put on that short is what's going to count. So on the Dow 30, we've got the major turns. We've got a 3-day bottom. So we got 1 day, 2 day. We got by 3 crows to resistance level, resistance 1 and 2. This neckline over here is really going to be important. Notice how the 20-day simple moving average has crossed over the green line, the 20-day simple. Okay, so you've got this mathematical equation where these charts are broke. It will take a significant period of time going through the month of August and September to actually, because most bottoms will get tested. This was an exceptional bottom right here, and last week we finally got the majority of the people sold out. So the primary focus is that when you get deeply oversold, you're going to get upside volatility to the downside volatility. Margin debt selling, the contagion fears around the world, the lower GDP growth. We got lots of economic data coming out this week. PMI, CPI, things that were having contractions in June and whatnot that started there. After that summer rally, they used some hotter numbers than expected. The thing about believing any kind of economic indicators now that are coming out as far as the numbers go is that we're headed into a major election year in 2012. What we will tell you is that with the kind of data coming out, the market's looking for any good news that it can coil itself all the way back up to this neckline. And that would be right here, slightly right above the 200-day moving average. Okay, that's where we had the breakout to the top here during that rally, and this was that counter reversal, and this is where the big volatility trade came in. We have 3 days up, but look at the amount of days we had down. Hey, the thing about it is knowing how to position oneself. It's a monthly options expiration, and this video here will apply to the NASDAQ 100, NASDAQ Comp, and the S&P 500. They're all the same. And MMTs, what will end up happening is that the put to call ratio at the lower end of this level was extremely mathematically profoundly out of whack for these kinds of upside volatility bounces that markets experience. Within a bull trend pullback has bounces. A bear trend upside volatility trades totally different than those other kinds that we've worked on so hard together with each other on a daily compounded level. So any moves up in the key indexes with the economic data that's coming out with the dog days left is we will be selling short at different levels, and we'll see how far we go. We said 3 days up. Now it's going to be about what back end filling may be. Most bottoms will get tested. That could be another, couple of weeks or 3 weeks or a month out, or it could come right away. It depends on what kind of headlines that come out. The last 3 days we haven't had any headline news. And the upside in the bargain hunting and the high frequency volume machines that compute these moves, they buy the full Dow 30 stocks, and of course you're going to go up. But you've got a big separation between the 10 and the 20 and the 10 and the 200, no matter what, that the up moves will be selling short into those. And I would say to people on any up moves into these resistance levels in the dog days of August that you evaluate what you're doing.